Yesterday in my signal service, I took a lot of trades.
No, that's a lot of
trades. And yes, I do offer a signal service. And yes, I do actually trade and place real money in the markets. I wanted to highlight some of the things that I've been recently up to in the markets. And also maybe this will showcase a little bit of what you could expect if you do decide to join us in the VIP room. I know everybody gets such a bad rep about signal services because most people who provide them are not actually trading any live funds. But I'm going to show you a live account, show you what I currently did in the markets, and we can talk about what I'm expecting for the rest of this week. Whether I'm right or wrong, you'll see it all here on YouTube, and that's kind of the fun of it. So let's jump in. So before I show you my current positions, let's go through this simple concept. When we look at indices and we talk about whether or not I am convicted to the bullish or to the bearish side, the reason I am bullish on the stock market can be broken down into really simply two things. You ready? It's going to be so simple. I'm going to blow your mind. Fundamentally, let's go into the fundamentals here. We have two categories. Our two categories that we're going to discuss are interest rates and growth. Now, when you're looking at the stock market and you're trying to decipher whether or not you want to be bullish or bearish in the financial markets, these two things are the most important on a long-term basis, in my opinion. First of all, interest rates. Why does that matter to the stock market? Well, borrowing costs are basically leverage or the lack thereof for stocks to grow faster. If borrowing costs are low, companies and consumers can get out there and do more activity, which allows corporate profits to grow, employment to stay strong, the consumer to do better, and it's a bit of a positive cycle. If interest rates are rising and making all of that harder, stocks and companies may have the opposite effect. Now, we have to ask ourselves, are interest rates going up or going down? They're going down. This is a positive thing for stocks. Step one. Step two is growth. Are companies growing? Are people employed? Are consumers spending money? Are PMIs looking okay? These are the data points that we want to consider to answer the question of whether or not we see economic growth on the horizon, and very specific to stocks, do we see corporate earnings rising? And the answer to that is yes. So we have interest rates coming down, growth still present in the stock market. If you don't believe me, let me show you. And this week we're doing something pretty fun. We're giving away a free copy of the Edge Finder. It is a totally free to enter competition, or not really competition, it's just a giveaway. We're selecting one random person to win a free copy of the Edge Finder. Bit of a Halloween theme for fun thing that we're doing. So if you'd like a chance to win an Edge Finder copy, click the link in the description, throw your name in the hat, and you might win. On the left-hand side of your screen, you can see I just opened up a tab in the Edge Finder called Economic Growth. Specifically, I've pulled open GDP growth. And if we take a look at this chart, what we see here is a very simple reality. The US economy is still growing. And the idea of GDP growing at a rate of 3% is still healthy. It may not be as high as it was over here, but it's definitely higher than where it was here and here. My point with where I'm going with this is if the recession is imminent, we would see these numbers not looking so positive. Now, I'm not saying a recession is never going to happen. It will happen. It will always happen. A recession is inevitable at some point. But timing it is the bane of existence of economists. And right now, as a trader and not an economist, I don't call myself an economist, I call myself a trader because I don't try and predict all of this stuff next. I use what's in front of us to try and just trade the environment we're in. Right now, we have positive growth in the US economy, so we can expect businesses to continue to grow. We can expect GDP growth to equate to people ideally continuing to have jobs and being able to slowly start to afford things because of that first clause that we talked about, the interest rates coming down, which is largely thanks to the inflation cool down that we've seen. Now, I just want to go ahead and highlight that this data point is an error and my team is already fixing it right now. I'm not sure why we had this weird CPI data point show up. It showed up this morning. I think it's some code error, but we're going to have that corrected. It's down here. But my point with that is that if we take a look at the overall trend here of inflation is cooling. That makes prices more affordable to consumers, meaning they can go out and they can buy cars and houses and they can do things again. And as that continues to slow, that is also good for corporate earnings. So when I look at the full picture and I say, okay, where am I at with the stock market? The answer is I am a buyer. I'm a buyer on dips. Yesterday, we got a dip. And so now we can finally full circle go back to what I started this video with, which is, what am I positioned in? Well, I took a bunch of trades in our VIP room and a lot of them were options. Some of them were not. The first thing I'm going to show you here is my options positions. I sold puts yesterday on a lot of stocks. Now, if you don't know what selling puts is, you can buy puts, which is like placing a bearish bet, or you can buy calls, which is like placing a bullish bet. Or you can be the casino and sell puts or sell calls and get paid to offer those bets to other traders. If it sounds complicated, it kind of is, but it doesn't have to be all that complicated. We'll leave a link in the top right hand of your screen right now about my options trading strategy if you'd like to learn more. It's very simple. It does require trading capital, but it produces relatively stable, consistent gains, especially if you have a long-term outlook in the stock market like I tend to. So companies like Nvidia, JP Morgan, Apple, Amazon, Airbnb, Tesla, ExxonMobil, and a little bit of Bitcoin through the BITO ETF. I sold puts on a little bit of everything yesterday, it feels like, and most of those positions are now in the green. I also bought the NASDAQ yesterday, QQQ, as it tagged into this area of support. And my theory here is that if it doesn't work out at this level, I have some other ones that I'll be looking to potentially try again on. But right now, NASDAQ seems to be putting in at least a lower, or a wick along these lows. And I'm not too phased. If this trade doesn't work out, then it's all good. I have so many positions that I'm looking to trade right now. Now that we've actually gotten a constructive bit of a pullback here on a market that I'm very bullish in, I am already stepping in on this dip. Now, I know people are already thinking, Nick, you might be way too early. What if you're early again like you were over here? Yes, could be, but what if I'm not? And I've done this for a long time. I know my strategy pretty well. During this time, buying those pullbacks was a wonderful opportunity to continue to see the uptrend. And again, we go back to where I started this video, which is, why am I bullish on the market? Interest rates coming down, growth still stable. Okay, I'm a buyer, right? I'm looking for dips, and I might get tossed around a little bit if this market takes out the lows, and that's okay. I'll look for better opportunities. I'm not risking the whole account on these individual trades. Now, another thing for the market nerds, the trading nerds who do like to also study options as well, selling puts is a lower beta approach to trading. Now, what I mean by that is that there is lower risk in just selling puts, selling cash secured puts, than outright buying shares. And if that was over your head, then it's not as complicated as it sounds. Selling puts means you collect income if the market goes sideways or slightly down or up. But you don't get access to the full gains of just buying the shares and it going straight up. That being said, it's a bit of a hedged position because if the market goes sideways, you make money. If the market goes slightly lower, you make money. The only time you lose money is if the market tanks hard and you have to buy the shares at a higher cost than where they're currently trading. I know that sounds complicated, so I'm not going to go too far into the options because I know not a lot of people in my trading following here are really interested in options. But if you are interested, you can join our VIP room. I'm trading them all the time. Speaking of VIP room, I mentioned that at the top of the video, I've been very, very active. I've traded currencies, I've traded ETFs, I've traded options, stocks, indices. I have several index trades that I opened yesterday. I'm looking at some commodities. I took a Forex trade yesterday, ETF trades. And if you'd like to unlock all of those, if you'd like to get all those in-depth analysis points, I break down every trade in depth. So if you'd like to get those trades sent directly to your phone, we're going to do something fun today. Using the first link in the description, we'll offer you a very secret and special discount. If you click the first link in the description and chat with a member of our support team, they'll let you know what the secret discount is for the day. Don't miss it. Chat with us, ask a few questions about the service. If it seems right for you, then we'd love to have you in there. It's a great time to join because we've got NFP around the corner, and this week is just super busy, full of trades. You also unlock access to Frank's trades, and if you'd like to sign up for Chris Pulver's trades, that is a separate service that we offer as well. If you're an existing member with us, check out Chris Pulver's trade alerts. If you don't have them already, send us a DM using the first link in the description down below. If you're looking for a better brokerage, then stick around for a second. I'm going to tell you how you can get some free sign-up perks with great brokerages all around the world. Whether you trade FX or indices, commodities, futures, all of the above, I'm going to show you a really cool way that you can get free sign-up perks with your new account. So if you're interested in switching into a different brokerage, you can get things like deposit bonuses or free stock shares, or you can even get access to some of our products for completely free. All you have to do to find out current perks being offered to new depositors is go to a1trading.com/brokers. That's a1trading.com/brokers. And as you look at that page, you'll see all these different offerings that we've currently locked down for you guys as subscribers, as viewers. Now, of course, we get something out of this. If you choose to use these links, you'll be supporting our page. But in return for the viewers, we've got great sign-up perks available for you guys so that you get some free game just by signing up for a brokerage if you're looking to do so. So check it out on our website. You can find current deals at a1trading.com/brokers. Thanks for watching this video, and on the screen right now you'll see some other options of other videos we put together that might be helpful to you in your trading career. So thanks for watching, and we'll see you next time.